Hello and a very good day to Madam Aziza. I am Refina, a final year BPA student. In this presentation video, me, myself and my group members will be elaborating about the Asian financial crisis happened from 1997 to 1998. First, I would like to introduce to you my group members. There is Nazmi, Fahim, Bahrim, Kasturi and me myself. In this presentation, we will be talking about the affected countries, causes leading to crisis, chronology of crisis, response and effect on countries' economics, currency and social. Now, let's move on to the introduction of Asian financial crisis 1997 to 1998 and its affecting countries. The countries that was severely affected in this financial crisis was Indonesia, Thailand, Malaysia, South Korea and the Philippines. Beside these countries, Singapore, Taiwan, mainland China, Brunei and Vietnam were less impacted, although all suffered from a regional decline in demand. Okay, introduction. The Asian financial crisis started in Thailand with the collapse of the Thai baht in July 1997. What began as a currency crisis soon affected the wider economy and spread quickly to the rest of the East and Southeast Asia. The financial crisis heavily damaged currency values, stock markets and other asset prices in many East and Southeast Asian countries, as I mentioned previously. Actually, on July 2nd, 1997, the Thai government ran out of foreign currency and no longer able to support its exchange rate. So the government was forced to float the Thai baht, which was pegged to the US dollar before. The currency exchange rate of the baht then collapsed immediately. After that, the Philippine peso and Indonesian rupiah went on a major devaluation as well. This led to heavy buying of US treasuries, which are used as global investment by most of the world's governments, monetary authorities, and major banks. Soon, the foreign investors lost confidence in not only the currencies, but also in those economies. In countries most affected by the crisis, banks and other companies collapsed or had to be rescued, and many others were forced to downsize and this resulting in massive unemployment back then. In Indonesia, the crisis even led to the resignation of the president. Also, the Asian crisis led to some much needed financial and government reforms in countries such as Thailand, South Korea, Japan, Indonesia, as well as Malaysia. Now, my next group member will elaborate about the crisis and factors leading to the crisis. Thank you.
Selamat sejahtera to Miss Aziza. My name is Kasturi and I'm doing final year semester in BPA course. So today I'm going to explain on the cause and factors that leading to the crisis. So if we move on to the next slide, I could attach here the timeline of the Asian financial crisis, which is started on July 1997 and ended in January 1998. So as we see the devolution of the currency and the burst of hot money bubble, what are the lead to the Asian financial crisis? So as we see on July 2nd, 1997, the Thai government is run out of the foreign currency. So the exchange of the currency rate of Thai baht collapsed immediately. So 2 weeks later, the Philippine peso and Indonesian rupees underwent the major devaluation as well. So the crisis is spread internationally and also to the Asian stock market is into their multi-year low in August. So as we see the capital market of South Korea, they maintain the relative stability of the financial crisis until October. We move on to the next slide of the cause and factors that leading to the financial crisis. So the reason of the Asian country face the financial crisis are complex, and also it's difficult to pinpoint. So the burst of the hot money bubble, it's seen as one of the main causes. So as we see, the high interest rate and the fixed currency exchange rate were put in a place. So the export and the foreign investment were the main drives to the economic growth. So as we see, the US dollar increased in the value of as the result of hot money flowing into the American market. So the largest scale of capital flight put downward pressure on the currency of the Asian nation. Soon later, the remainder of the Asian nation experienced the same as the financial crisis that faced by the Asian country. So if we see, the Federal Reserve increased the rate against the inflation in the middle of the 1990s. So the conclusion of the cause and factors of leading country is the appreciation of currency tied to the dollar, also improve their expansion of their export. Move on to the next slide. If we see here, I got include here the currency crisis and the probability of the currency crisis in year 1970 and till 1995 in sample, and also in 1996 till 1997 out of the sample. So the country crisis that I include here is Indonesia, Korea, Malaysia. In next slide, the chart of Thailand, Singapore, and also Philippines. So these are the sample of graph chart based on the currency crisis and probability that faced by the Asian country. That's all from me. Thank you.
Hello to Madam Aziza. My name is Muhammad Nazmi bin Zulkifli, and I'm currently in last semester of Bachelor in Business Administration. Next for my part is the summary of chronology of the Asian financial crisis that happened in 1997 until 1998. The collapse of the currency exchange rate and the hot money bubble led to the Asian financial crisis. It all started in Thailand in July 1997 and expanded all over East and also Southeast Asian countries. In many East and also Southeast Asian countries, the financial crisis damaged the prices of currencies, stock markets, and also other assets as well. The Thai government ran out of foreign money on the 2nd of July 1987. The Thai baht used to be tied with the US dollar, but the government could no longer support its exchange rate. The Thai baht's exchange rate fell right away because of this as well. 2 weeks later, the Philippines peso, Indonesia rupiah, and also Malaysia ringgit lost a lot of value. The crisis spread worldwide, and in August, Asian stock markets fell to their lowest points in many years. South Korea's stock market stayed most stable until October, but however, the Korean won fell to a new low on 28th of October. Later, on the 8th of November, the stock market had its most significant one-day drop up to that point as well. As to recover, the International Monetary Fund, IMF, stepped in and provided loans to help stabilize the Asian countries that were affected. Short-term loans of about $110 billion were given to Thailand, Indonesia, Malaysia, and also South Korea to help them get their economies back on track. In exchange, they had to follow strict rules such as raising taxes and also interest rates and also cutting government spending. As a result, by 1999, many affected countries will begin to show improvement. That's all from me. Thank you so much.
Hello, so my name is Rana Barim, so I will present the part of responsive and the corrective action that will take by the Asian country for the crisis, financial crisis. Next slides. So the response that take by the other global economy and other country is in order to stabilize the impact of Asian crisis and economies. The IMF step in and provide the loan for them, and they give the loan for 110 billion USD in a short-term loan for Thailand, Indonesia, and South Korea. This is to aid the stabilization of their economies for Thailand, Indonesia, and South Korea. So basically, IMF help them to make their economies become stable, and this is also known as the tiger economy. So after they get the loan from the IMF, so the corrective action that takes by the Thailand is they reorganize the banking industry by first shuttered 56 financial institution before advising commercial bank to get rid of their non-performing loans. Means that their bank to get rid all their non-performing loan, and who those don't have a loan or they make a short term period of loan, they just give the advice to shut it down. And besides that, they boost their capital reserve and encourage the nationalization and bank mergers with foreign institutions for small to medium sized bank. Means that all the small bank they change to become a medium sized bank and provide small loans in a big amount and a big such a circle. For Indonesia, Suharto, the president of Indonesia for 30 years, he was forced to leave office on May 21st, 1998, since the crisis happened. So the result, massive unrest that followed dramatic price hikes brought on a significant depreciation of rupiah. So at the 1998, the crisis depreciation persists. Growth in the Philippines fell almost nothing in 1998. Means that Indonesia have a crisis, plus Suharto need to leave the office at the May 21st, 1998. So the result make a massive unrest for their dramatic price for the products, for the economies, and also for their items. For the Korea, the bailout requirement, which included new labor market regulation that give employers more leeway in firing workers, lead Korea to implement restructuring strategy and initiative. South Korea and the IMF reached an agreement to address South Korea deficiency brought on 1997 Asian financial crisis. Means that IMF also helped more at the South Korea when the currency and the financial crisis struck Korea in November 1997. It had no choice but to request formal help from the IMF. Korea was managed to avoid the worst case situation, which is, for the example, for Soviet default, with the aid of IMF also and the other international organization and many in the support overseas, they can overcome the crisis and they change all the capital and also overcome the crisis with the help from the other international organization. That's all for my part. Next is Fahim will take over for the effect of countries' economy and currency and also the social. Thank you.
Hello, myself Mohammad Islam Fahim, and currently I am studying in my final year. So in this topic I am going to briefly discussion about effect on countries' economies, currency and social perspective. So let's move on to the economy part. The economies most affected saw a drop in capital inflows of more than 100 billion in the first year of the crisis, significant in terms of both its magnitude and its scope. The Asian financial crisis became a global crisis when it spread to the nation outside Asia. The foreign currency exchange rate, share markets, and prices of different values got changed. Also, the GDP goes down massively. So next, after the economy, the currency value changes was a vital issue at that time. The inflation ratio was higher than ever. Also, the currency value of Indonesia, Thailand, South Korea, and Malaysia got lost its value from 45% to almost 80%. Mostly the Southeast Asian countries saw the reduction of value in their currency. Apart from these two factors, there was one major issue, and that was the social perspective, how society got affected in that situation. So the currency depreciation invariably begets prices increase, primarily or imported goods or items with high import content, such as pharmaceuticals, food, and fuel. However, the degree of price inflation depends in part on the extent of government intervention, which is common in many countries, especially with respect to basic goods. Besides reduced employment earning, many households bear the loss of lifetime savings due to banking failures or of asset values owing to the collapse of stock and real estate markets. Finally, economic downturns result in lower government revenues, while a good deal of public expenditure has to be devoted to the restructuring of financial institutions and debt servicing. Normally, efforts are made to maintain previous spending levels in such basic social services as education and health, but lower real spending in this area is often inevitable. The nature and extent of the Asian crisis is such that it negatively affected virtually all population groups, but the severity of the impact varies across the social groups. As it goes across countries, more instance, construction and factory workers are generally more adversely affected by employment and income effects than the service sector's workers, and the women instead of men more. Similarly, consumer prices inflation, asset value loss, and credit squeeze hurt the urban households more than their rural counterparts. So that's it for this part.
So, in conclusion, South Korea, Indonesia, and Thailand were the places that the crisis affected the most. The slump also affected Hong Kong, Laos, Malaysia, and the Philippines. Additionally, Brunei, mainland China, Singapore, Taiwan, and Vietnam were less affected. However, everyone in the region lost demand and also confidence. Next, the causes or factors leading to the Asian financial crisis are the collapse of the currency exchange rate and the hot money bubble. Later, the response and the corrective action that taken by the International Monetary Fund, IMF, stepped in and gave loans to help stabilize the tiger economies in Asia that were affected. Short-term loans, about $110 billion, were given to Thailand, Indonesia, and South Korea to help them get their economies back on track. And finally, the Asian financial crisis quickly caused by the GDP and the number of jobs in the affected economies to drop significantly. In 1998, GDP fell from almost 14% in Indonesia to 0.5% in the Philippines. In turn, this has led to bad things happen in society, even though there are signs that the worst of financial crisis has overcome, and also the economies are starting to get better. However, the effects on society continue to be noticeable likely. The social problem is likely to worsen, and it is expected to last for a long time, even after the economies in crisis start to rising again. That's all from me for the conclusion of this topic. Thank you so much.